Welcome to the VA Assumable Loans 101, the things that the buyers and sellers need to know. At the end of this webinar, you will have a better understanding of how the assumable loans can help you in the current market. My name is Mansa Pablo, and I'm with Remax Elevate. I'm a spouse of active duty military member at PCS on multiple occasions. I'm certified as military relocation professional servicing Greater Albuquerque area here at Kirtland Air Force Base. So when it comes to the VA loans, my family has used them on multiple occasions, and I worked with them on multiple occasions as well. With the current high mortgage interest rate, the questions about the assumable VA loans are becoming more and more popular. So I invited Maria Cordova with Loan Depot to join us and answer those questions for us. And Maria, I'll let you introduce yourself.
Thank you so much, Mansa. I'm Maria Cordova, and I'm a mortgage professional. Been in the mortgage industry since, 1996. I've been originating loans for about 8 years, and prior to that, wore many different hats in this industry. But so excited to be on this part of the mortgage side and just helping buyers, and especially VA buyers, veterans, and active duty. It's just such a great loan and a great tool, and also a great thank you to the people who have served.
So to start off, what is the VA assumable loans, and are all the VA loans assumable?
So a VA assumable loan is a loan that if the person that has an assumable loan wants to sell their home, the buyer coming in buying the home can assume the interest rate and the mortgage balance that is currently in place. So it's a really great tool, because if somebody is walking into or selling a home, then like, let's just say I could go in and take advantage of that nice interest rate. And it's really great right now because interest rates are a little bit high, where a few years ago they were really great. So you asked if all loans are assumable, and no, they're not all assumable. It just depends on how the loan was set up when the loan was originated.
So if the loan wasn't assumable when the loan was originated, can the seller reach out to the bank and see if they will change the non-assumable loan to make it assumable, to give that opportunity, or is that not something that the bank?
Unfortunately, it's not something that can be done because it's based on the original terms of the loan.
Okay. So when somebody would assume a VA loan, does that impact or on their VA eligibility?
So if a VA, if a veteran or an active duty military person came in as the buyer, then their entitlement will take over on the assumable loan. But if a non-veteran or non-active duty came in and bought the home, like me, then the entitlement would stay with the veteran that is selling the home. So that could be a little bit of a risk for the person selling the home.
So for that entitlement, if you, like, as somebody that is not a veteran or active duty, does the entitlement change once you pay off the loan, or like if you would refinance down the road?
Yes, because then it would become probably a conventional loan or maybe an FHA loan, depending on what that borrower qualifies for, and then it would remove the entitlement.
Okay. So why would the seller even consider offering their VA loan as the assumable?
Well, because then the buyer would be able to take advantage of whatever the balance is on the house. So they're getting that as their new loan amount, and then they could potentially have a really great rate. Let's just say the seller bought it in 2023 and the interest rates were in the threes, so it could really make an impact on the monthly payment.
So the buyer can then essentially afford more house because the interest rate is lower, correct?
Correct. That's correct.
And so you mentioned the gap. So does the gap between what the house is selling for right now and what the amount of the loan is, does that need to be paid in cash or are there loans for that?
So it depends on the loan servicer and what they would allow, but typically they should be able to allow up to the loan to value on a normal VA loan, or in the if you did another government loan like an FHA loan, if that was assumable, it would allow for a second mortgage. We would just have to know these points on each particular loan and their servicer. So you could do a second mortgage to cover that gap, and that gap is the difference between the balance that is owed on the mortgage and the purchase price. So either the buyer could come in with cash as their down payment, they could potentially get a second mortgage, and I mean, they could potentially get a seller, like a seller second. But that is really, it's really case by case in that case.
Okay, and so now we covered the different gaps and things, but what does the assumption process looks like?
So typically on a regular purchase, you can probably close a VA loan in 3 weeks to a month, 30 days. And what they're saying on a assumable loan is that it's 30 to 60 days is the potential that you're looking at in closing from start to finish.
So why does the assumption of the VA loan take longer?
A little bit longer. Well, you're not dealing with a local or a lender. Like, you wouldn't come to me to do it. You would go directly to the loan servicer. So you're having to work around that time frame, and they're just asking to prepare for at least 60 days, and it's just basically it's transferring everything in from current borrower to the new borrower. So this is just a process that they have to go through.
And are there specific fees involved with the assuming the VA loan?
Yeah, there is a 0.5% funding fee that needs to be paid up front, and there could be processing fees that the loan servicer has. So it's less than if you were doing a regular purchase on a regular loan, but you still do have to pay title fees, but it is a little bit less. So that's nice too. You can't finance those though. They have to be paid up front or paid at closing.
Okay. And so how does the interest rate transfer, like is that like the same as what it was on the original loan, or is there like a medium?
No, they get to take advantage of the rate that was originally done on the original note.
Oh, okay, so that's nice. So whenever you're then doing like a secondary mortgage, um does the secondary mortgage come with their own terms, or does it kind of like mirrors the amount that was left on the primary loan?
So it would come in with their own terms based off of what the borrower qualifies for and what the servicer, the current lender, offers. We'd have to work in tandem with them and their what they would allow us to do.
Okay. And what are the biggest misconceptions about the assumable loans?
The misconceptions are, so can anyone assume a loan? And you have to still qualify for the terms based off of the current lender. So you do have to go through a qualification process for that. There are no fees. That's not true. Like we said, there's a 0.5% VA funding fee, a processing fee, and then your title fees that you have to pay that cannot be financed into the loan. The other thing is if you can be a non-veteran, but of course the current loan and the current seller would have to hold that entitlement. Um, and let's see. And then the assumption you can't get any cash back on an assumable loan. So those are pretty much the misconceptions.
And what would like, are there any red flags or risks that the buyers and sellers should be aware of whenever they're talking about or thinking about the assumable loans?
I think the biggest thing is we have to prepare the seller um, when they're using, they're going into it and they're offering that assumable loan, because if they're selling to somebody who's not a veteran, of course we have to worry about their entitlement, which could cause them to not be able to qualify for their next home, or it could, but it might affect their down payment. So that's just something that we want to make sure we educate them. Um, the other thing is that the buyer does have to qualify based on the lender's approval. Okay, so and it's all handled through the loan servicer that the loan is currently with. Um, there is one thing that is mentioned. It's that if the seller does not obtain a release of liability, they could be legally responsible for the mortgage until that release of liability comes. So that is another thing that needs to be educated throughout the process, is that when they go through the loan, that they definitely get a release of liability through the process. So that would be the biggest and most important thing that we have to educate the sellers on.
And so with now, with the high interest rate, have you seen like the increase in the VA assumable loans, or have you like heard within like the lender community? Are they more common these days than what it was like, let's say, a year ago?
They talk about the commonality of it. It's the thing is that I think where people get hung up on is that they might not be able to come up with that gap, the difference between the loan amount and the purchase price. And that may be the only thing that may stop them from being able to take advantage of the assumable loan. And I think that's the only thing. And then, I think it's really just a lot of people don't use it because maybe they haven't reached out to the loan servicer to get all the answers. So I think up front, when we're talking to the seller and getting prepared and getting the documentation and getting all the answers up front before the listing, I think you can do a big service to the potential buyer coming in, because you've answered all those questions ahead of time, based on what the loan servicer is going to qualify the upcoming buyer in.
Yeah, and I mean, we can also ask them if they are willing to offer like the secondary mortgage, or if they would accept a secondary mortgage.
Exactly. Yeah. Yeah. And they may be able to offer it, or if they don't, then maybe I could come in and help with that financing, as long as they do allow for it.
Yes, because the loan depot does do the secondary mortgages, correct?
We do have a standalone second.
That's good to hear. Is there anything else that like you would want to tell to a potential like seller or buyer? Just kind of, if they do decide to go on the route of the assumable loan, how to approach it.
I think as a team, just walking in and getting all the documentation from the seller, so that you become, as the realtor, you become aware of what's available. How much is that balance? How much are you working with, and as far as the gap? Um, Getting to know what the lender is going to be looking for as far as the assumable loan, and then maybe asking the questions like upfront with that particular lender or servicer, like how long is it going to take for us to get somebody through the process, and then that way everything's answered up front before you start marketing the loan. But man, if you can take advantage of somebody who has a 3% interest rate, wouldn't that be amazing?
I mean, you can get so much more house with the 3% versus with
Yeah, I know. It would be really exciting to be able to see that. I mean, as a lender, of course, I would want to do the whole loan, of course, but for the buyer, it just makes sense. You know, if they can get either a second mortgage or maybe they have some cash on hand, it's a make sense deal.
Yeah, and especially, like if something that was for the loans were that started like within the last 2 years, but then now they have to sell based on like the PCS or things like that.
Hmm.
I think it would be really beneficial with because the house is doesn't value that much more, so the gap is lower,
True.
and then it would be easier for the buyers.
That's true. So we may not be looking at a whole lot of money for them to come in with or a small second.
That was all very good information, and I really appreciate you taking the time to chat with us about that. I think it's great to being able to educate the buyers and the sellers like upfront.
Absolutely. And thank you so much for asking me to do this. I think it's great for us to educate and let people know like that we're here to help them, you know, and at the end of the day, it's just helping families getting into homes, right? So
Yeah, we all want the same thing.
exactly. Exactly. Well, thanks so much for having me, and I look forward to our next chat.
Yes, me too. Have a good day.
You too.
Bye.
Bye.